Chris, let's turn back to the major averages, and joining us now is Doug Flynn, certified financial planner and co-founder of Flynn Capital Management. Doug, thank you for being here. I want to get your biggest takeaways from today's session. Mostly positive, at least for the NASDAQ and the S&P, although the Dow down again 0.1%.
Yeah, hi, Alicia. It's great to be with you. I think that as we move through this, the Delta variant is playing less of a role in concern. And while there are other concerns that you've mentioned, it looks like those are not going to have a material impact on the earnings front, which we're clearly in earnings season, so that's important. But also longer term earnings look like maybe it's not going to take as much of a hit. And so things are looking better. I think that's part of what's weighing in here today.
Yeah, I feel like earlier in this month in particular, we had a lot of pessimism and concern around earnings. That seems like in the last week or so has shifted a little bit. I think there is some trepidation, I guess, with certain sectors when it comes to earnings. But banks last month showed and started kind of this rally in early earnings season. How do you anticipate that impacts the rest of this month? We know September and October, obviously, traditionally and historically, the most volatile times of years for the markets, usually the worst performing. But October seems like we flip the switch and there's just more optimism now. To your point, going into this earnings season, do we end there? Does October end up being kind of better than historically, or does it end up falling into the pattern?
Yeah, that's a lot in there. I think that last week we had like 8% of the S&P report, and the numbers that came out were about 80% of them beat expectations. So this week we have 15% of the entire S&P coming out, and so we're looking in there and seeing, is that going to hold true? There's some key names we're looking at later in this week to see how they're going to fare. That's what everybody's looking for, to look a little deeper, because the comparisons are odd considering a year ago where we were in the pandemic. But to your point about volatility, September and October are always the most volatile. You're right. September, interestingly, is by a percentage, and October is typically by points. So just interesting how we look at it. But September was a little more volatile than we've been used to, and we had a little bit of a sell-off, down about 5%. So that's good. That was some opportunity. And October's turning into be the exact opposite. The best month since March in the S&P, and April in the Dow. So those two are it's looking like maybe it's going to buck the trend a little bit and get through this as things start to get a little bit clearer. I don't know that we fully come out of all of this until the new year, when people are really jazzed to get back to work, because I don't know a lot of people who really want to start working in November and December, if you know what I mean. They'll probably start it back up next year, and I think things look brighter then.
Oh yeah, take the holidays off at this point. If you've been off this much, just go ahead and take the rest of the year off. I could imagine that mindset. I don't know it personally. In terms of earnings season, you mentioned that there, obviously we've had a good number of companies report. I pointed to banks kind of being the big headline out of last week. What are you watching for the remainder of the companies that are going to be reporting for this kind of this quarter? Obviously, inflation is something we talked about. Supply chain is kind of a big buzzword that matters a lot when it comes to predicting kind of growth moving forward or matching demand. What else is out there in terms of being on your radar?
Yeah, so we're looking at Johnson & Johnson, which comes out, I think, tomorrow morning pre-market. We're looking at, they came out originally at expectation of 1 million doses of the vaccine. Now they lowered it to 500,000. So we're looking to see what are they doing with the vaccine. Obviously, it's a big conglomerate. They have a lot of other products, so we're not overly concerned about how much of an impact that's going to have. But those are the things you want to look at there. We're also looking at Netflix. Netflix comes out tomorrow after the close. And, after 20 million people last year, 5 million year to date, and only 2 million in the last quarter of new subscribers, how do they come through? They're creating a lot of buzz on a couple different fronts, but where do they go from there? That's the guidance we're looking for. And the other one we're looking at is Tesla, which you've mentioned. I think that's Wednesday after the close. And that one is just, can they deliver the amount of vehicles that they want to, and that bodes well. Does this finally get over $1,000 a share as a stock, which it can if it delivers, but all these disruptions and things that are slowing things down. If I have to hear the word, because I can't get something because of supply chain interruptions one more time, I mean, I don't know. I hear it about everything, and now it's somewhat of a convenient excuse for a lot of people. But, I think things are working their way through slowly, and that's the key word there.
A few weeks ago, I mentioned we should start putting like a calendar or a tally of how many times we say that during the show. I think it might be a fun one. To incorporate, because it is a buzzword that we literally say, I don't know, every few minutes, if not multiple times in a minute.
Or for the college kids, you could make it a drinking game, but I'm not advocating that.
we'll steer away from that probably for legal reasons on our end. I want to get your thought on one of the companies you mentioned there, Netflix. Obviously, they're reporting after the bell tomorrow. We're going to cover that obviously on our show. Subscriber numbers is obviously one of the key metrics that we have focused on with that company. But I've started to think, and I want to get your thoughts in terms of, is subscriber growth, obviously it's going to be an important factor for many investors looking at their earnings report coming out tomorrow, but is it going to be as important as Netflix painting the picture of a diversified income or diversified revenues here, given that at some point we're going to completely peak and plateau at subscriber growth?
Yeah, you're going to have to. I mean, there's a lot of competition that there wasn't before for streaming. There's a lot of different avenues where people can spend. And now when you start adding up Netflix and Hulu and this and that, all of a sudden you're back up to what a cable bill used to be. So the cutting the cord isn't so much saving anything anymore in order to get all the content on all the providers that you want. So you do end up having, I think, people picking and choosing what they want to subscribe to. So I think you're right. I think they have to get creative and find new content to keep it going. But at some point, you just hit as many people as you possibly can, give or take, and then you're looking at how you're going to raise revenue from there. Is it cut costs? Is it charge more every month, which nobody likes them to do, but they may end up having to do longer term. Costs are going up everywhere. Inflation is there. On the other side, I will tell you, consumer spending is higher than it was before the pandemic by about 20%. So people have money. They just are choosing what they want to spend it on. And that's the interesting thing that we see. Where are they spending that money and what do they decide to spend it on?
Yeah, speaking of that, I mean, last week I thought one of the big takeaways I took out of last week was retail sales numbers and then consumer sentiment. Consumer sentiment shows that there is a concern for inflation, but retail sales numbers show that consumers' patterns aren't matching their concerns, right? They're still spending more. They have more money to spend. When do you think that levels out and peaks? Because we know inflation is certainly top of mind for companies. It's on top of mind for many Americans. But to your point, they're still spending. When does it really impact the market? Do we potentially see that in this quarter, at least in certain sectors?
I don't think this quarter. I think, you do have consumer prices up the most since 2008. You have producer prices up the most since 1981. And so you do have that. Those are going to translate into higher costs. I think while people still have the money, it's not going to impact them so much. You're going to see a little bit more of that squeezing, I think, a little bit more into the new year. So you might have some opportunities with the market to capture some investments that you have gotten away from you here and there as the volatility may pick up a little bit. You got to pick your spots. But I think the backdrop turns into next year, higher earnings overall. People continue to spend. The consumer is the key to the United States and the economy. And I think that stays online. And I think as we do get more and more farther away from the pandemic, we get more spending, not less. And then people get back to work, and slowly we start to get back. Look, we're gonna overall come over everything that we had before. The key is the amount we missed over the last year and a half or 2 years by the time we're done with this. Do we make that up? And that's what remains to be seen. I think we get back on track and get higher than we ever were, but do we capture what we've lost perhaps forever? That's a question we want to see. And we're seeing some of that in some of the earnings as it plays out.
Yeah, certainly something that we'll continue to monitor. Your insight, as always, super valuable. Thank you for your time. Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management.